get richer. In fact, following the financial crash of 2008, the OECD reports that 95% of economic gains have gone to the top 1%, and the COVID-19 pandemic saw one of the biggest wealth transfers in human history. Over the last 2 decades, the global population of billionaires has risen 5-fold, and as of writing this video, there are 8 publicly known people worth over $100 billion. But how do they do it? And is it possible for regular people to emulate some of their tactics? The answer is a mixed bag. The wealthiest people have unprecedented control over government policy and can manipulate their connections in public office to make certain they extract as much wealth from the economy as possible. However, since 2008, the number of millionaires has risen by over 50%, with many of them planting the seeds of their future success during the financial crisis. Today, we explore not only how the richest make their billions, but how regular people can make a small fortune. So, sit back, relax, and hopefully we can learn a thing or two. The stock market. This first one may be obvious, and you're going to need some capital to get the ball rolling. A recession is typically defined as 2 consecutive quarters of negative GDP growth, which inevitably leads to a decline in stock market value. Let's take a step back to the 25th of September 2008, when the bankruptcy of Lehman Brothers and the collapse of Merrill Lynch, along with a liquidity crisis of American International Group, all primarily due to exposure to packaged subprime loans and credit default swaps issued to ensure these loans and their issuers rapidly devolved into a global crisis. This resulted in several bank failures in Europe and sharp reductions in the value of stocks and commodities worldwide. In just 1 week, the stock market fell by over 21 points and continued to fall over 40% within the year. But that's nothing compared to the Icelandic market, which was down over 77%. For most, this economic downturn was nothing but a disaster. But a slew of savvy investors saw only opportunity and exploited the crisis to buy shares for pennies on the dollar. Legendary investor Warren Buffett's buys included the purchase of $5 billion in perpetual preferred shares in Goldman Sachs, GS, that paid him a 10% interest rate and included warrants to buy additional Goldman shares. Goldman also had the option to repurchase the securities at a 10% premium. This agreement was struck between both Buffett and the bank when they struck the deal in 2008. The bank ended up buying back the shares in 2011, making Buffett billions in the process. Billion-dollar deals with desperate banks might be out of reach for most of us, but even small investments in the stocks would have seen hefty profits. For example, Bank of America fell to as low as $3.07 in early 2009, and in 2022 reached an all-time high of almost $50. This probably is going to be a surprise, but in 2011, Forbes reported that the world's billionaires were already richer than they were before the crash, with high net worth individuals owning over $47 trillion, and the number HNWIs was almost 9% higher than it was in 2007. The property market. Perhaps more millionaires were created following the 2008 financial crash from clever investments in property than anything else. House prices in the United States fell an average of 13.9%, with regions seeing property falls as much as 40 to 50%. These drops allowed savvy investors to swoop in and buy up huge swaths of undervalued properties. By 2014, the United States had more millionaires than at any other time in history, with a significant portion being newly made and their status amongst the financially independent stemming from property investment. Thousands of people took their savings and bought 2 or 3 properties for rock-bottom prices. If you have a good credit rating, then most banks only want a 10 to 15% deposit to get a mortgage. As an example, if you have savings of $200,000, then you can purchase 3, 4, maybe even 5 homes for a fraction of what they'll be worth in only a few years' time. Then, all you have to do is rent those properties out and sit back as their values quickly recover to pre-recession levels. Although for most, economic downturn may threaten to push them into financial ruin, but if you're clever, then you could come out the other end with your own miniature property empire. Another way to make huge returns is by financing failing construction projects. Billionaire investor Carl Icahn was able to secure the bankrupt Fontainebleau property in Vegas for approximately $155 million, or about 4% of the estimated cost to build the property. Icahn ended up selling the unfinished property for nearly $600 million in 2017 to 2 investment firms, making nearly 4 times his original investment. This type of investment may be out of reach for most of us, but opportunity comes to those who go looking. Predict the crash. Predicting a market crash sounds a lot easier than it actually is. For every prediction that comes true, there are 1,000 more that fall flat. Betting against the market is not for the faint of heart, and although a lot of money can be made, a hell of a lot of money can be lost. Though perhaps this method is best left for the big boys. But with that being said, just how much money can be made from a well-timed bet? The most lucrative bet against the stock market in 2008 was made by John Paulson. His hedge fund firm, Paulson & Co., made $20 billion on the trade between 2007 and 2009, driven by its bets against subprime mortgages through credit default swaps. Paulson's personal earnings were about $4 billion in that time period. And then there's Steve Eisman, who was a key character in Michael Lewis's best-selling The Big Short and was depicted by actor Steve Carell in the movie based on the book. The hedge fund manager bet against subprime mortgages by buying hundreds of millions of dollars in credit default swaps. The trade worked so well that his hedge fund at Front Point Partners more than doubled in size to $1.5 billion from $700 million during the financial crisis. But perhaps the most well-known investor from this period is Michael Burry, who made a personal profit of $100 million and a profit for his remaining investors of more than $700 million. Scion Capital ultimately recorded returns of 489.34%, one of the highest yearly returns in hedge history. The bottom line, there's little more important in economic downturn than maintaining one's cool and trusting the tried and tested methods of past investors. Of course, regular folks like you and me can't compete with the likes of Buffett and Icahn, but when more normalized conditions return, savvy investors can be left with sizable gains, and those that are able to repeat their earlier successes in subsequent downturns end up rich.